Is the real estate market as solid as we think it is? Well, it appears the landscape is shifting. The global housing market has recently experienced a downturn, with house prices falling and sales declining in many advanced economies. Now, you might be asking yourself, what's driving this downturn? The answer, in part, lies with central banks. Their efforts to combat inflation have led to rising interest rates, making housing less affordable for many potential buyers. This, in turn, is contributing to the slowdown. But that's not the only factor at play. Unemployment levels are also crucial in determining the severity of this housing market correction. As joblessness can lead to forced sales and even foreclosures, a cooling jobs market could further impact the housing market. The effects of this downturn are felt worldwide, with major economies like the United States, the United Kingdom, and China witnessing falling house prices. And if that wasn't enough, mortgage rates have nearly doubled on average since last year, putting even more strain on buyers. The once booming pandemic house prices are coming to an end, and economists predict declines of 15 to 20% in some markets. It's a stark contrast to the soaring prices we've seen over the past few years. So, as we can see, the real estate market is undergoing some serious changes. The outlook for the housing market is uncertain, with the potential for both mild declines and more severe consequences. It's a situation that warrants our attention as we navigate these uncharted waters. What about the commercial real estate sector? Is it faring any better? It's a question on many minds, and the answer, unfortunately, isn't too optimistic. The commercial real estate industry is grappling with its own set of challenges, such as falling property valuations and limited access to credit. The pandemic has drastically altered work and shopping habits worldwide, and these changes have left a significant impact on the sector. For instance, as more people transitioned to remote work, the demand for office spaces took a hit, and the once bustling shopping centers are now struggling to maintain foot traffic in the wake of online shopping surge. Furthermore, the potential for a recession looms over the industry. The banking sector's recent stress is expected to ripple into commercial real estate, with smaller banks anticipated to tighten their lending standards. This could further exacerbate the situation, making it even more challenging for businesses to secure the necessary funding for their commercial property needs. So, the commercial sector isn't immune to the challenges facing the real estate market. It's a turbulent time, but as with all things, it's also an opportunity for innovation and reinvention. Let's cross the pond for a moment. What's happening in the UK? Over there, the commercial real estate sector seems to be entering a downturn, at least according to a survey by the Royal Institution of Chartered Surveyors. It appears that higher interest rates and a dip in consumer sentiment are contributing factors to this decline. In fact, 43% of those surveyed believe that the sector is in the early stages of a downturn, while another 10% think it's already in the middle of one. This is a significant shift from just 3 months ago, when over half of respondents believed the sector was on an upswing. And it's not just sentiment that's taking a hit. The hard numbers are showing signs of trouble too. Capital values are projected to fall for retail spaces, and demand for office spaces is leveling off, particularly in secondary locations. Yet it's not all gloom and doom. The outlook for industrial sites like warehouses remains strong. But overall, with further interest rate hikes expected and credit conditions for property investment tightening, the UK's real estate market seems to be at a turning point. So, the UK is also experiencing a downturn in its real estate market. So, what does all this mean for early 2024? Drawing from the current trends and issues we've discussed, the early 2024 real estate forecast appears to be a mixed bag. On the one hand, we can expect further declines in house prices. This is largely due to rising interest rates and increasing unemployment rates, both of which can lead to forced sales and foreclosures. The once booming pandemic house prices are projected to simmer down, with economists predicting declines of 15 to 20% in some markets. On the commercial front, the situation seems equally challenging. The sector has been hit hard by changes in work and shopping habits, exacerbated by the pandemic. Falling property valuations and limited access to credit are worsening the situation, and smaller banks are tightening their lending standards. Particularly, Office and retail properties are expected to take the brunt of the impact, while multifamily and industrial assets may remain relatively stable. Additionally, the possibility of a recession looms large over the real estate market. High inflation combined with a weakening economy could potentially push us into a period of stagflation, which could further exacerbate the situation. So, the future of the real estate market is uncertain, but it's clear that we're in for some interesting times.